Somewhere deep in the vaults beneath New York lies a secret pile of metal. Not gold, silver, billions of ounces of it, controlled by one bank, J.P. Morgan. And according to one man, that mountain could soon decide who gets rich and who goes broke. Kiyosaki calls it the sleeper asset, cheap now, but waiting to explode. He says when the bubble pops, silver will move faster than gold, and the world won't be ready. The question is he right? And if he is, why is one bank sitting on the world's biggest stash of silver? Let's pull the thread. To understand Kiyosaki's $200 silver bomb, you have to go back to 2011, the last time silver nearly blew up. The price rocketed to almost $50 an ounce after the financial crisis. Then, suddenly, collapsed. Investors lost billions. And who quietly bought most of the dumped silver over the next few years? J.P. Morgan.
Between 2011 and 2019, the bank reportedly accumulated over 600 million ounces, more than any single private or government entity on Earth. Enough to corner a chunk of the market. Quietly. Legally. And here's the twist most people miss. J.P. Morgan wasn't buying silver to make jewelry or electronics. They were accumulating it as insurance. Against inflation. Against dollar collapse. Against chaos. Because silver isn't just a shiny metal anymore. It's a core industrial resource. Every solar panel, every EV battery, every 5G chip needs silver. So when the world goes green, it also goes silver. But supply is tightening. In 2023, global silver demand hit a record 1.2 billion ounces, while supply lagged. That means we're already running a deficit, pulling more silver out of warehouses than mines can replace. If that continues, scarcity pushes prices up. But here's where Kiyosaki's $200 prediction turns dangerous. Not because it's impossible, but because it might happen too fast for the system to adjust. Let's imagine silver jumps tenfold overnight. Who wins? Retail investors, yes. The ones holding coins, ETFs, mining stocks. But the bigger winners? J.P. Morgan. Because while retail traders might own tens of ounces, the bank owns hundreds of millions. So when people like Kiyosaki say silver will hit $200, the question isn't if, it's who makes the money on the way there. And maybe more importantly, who doesn't. Did you know in this modern era who will be most rich and powerful? The person who has knowledge, because on the basis of knowledge, he will earn money fast. So if you want to become a powerful person, earn knowledge. In this channel, we provide best knowledge, so don't forget to subscribe. Let's go further. There's another side to this story. Paper silver. For every actual ounce sitting in a vault, dozens of ounces are traded on screen. It's a promise, not the metal itself. Most traders bet on prices without ever touching silver. That's leverage, which means if real demand spikes and everyone demands delivery, the system breaks. Now you see why Kiyosaki's $200 bomb feels more like a ticking time device beneath the entire financial floor. Some analysts say silver can't possibly hit $200, that it would destroy manufacturers, spike costs in every tech sector, and crash demand. Others argue that's exactly why it could, because the moment silver becomes strategically valuable, nations will hoard it. China already is. India too. Meanwhile, the US holds almost none, not since silver was removed from circulation in 1964. So, when you hold a silver coin today, you're holding something even your own central bank doesn't.
Which brings us back to JP Morgan's vault.
When you control the one thing the world's tech economy quietly relies on, you hold power few understand. Whether they dump or hold that silver can move billions in wealth, instantly. And it's almost ironic, the world's most powerful brand of private banking sitting on a bet that looks like something out of a doomsday prepper's playbook. Let's test Kiyosaki's math. Silver today hovers around $27 an ounce. To reach $200, it would need to jump over 640%. That's not impossible. In 2001, gold was $250. By 2020, it peaked above $2,000. But silver's volatility is sharper, smaller market, bigger mood swings. If gold reflects fear, silver reflects panic. And here's a quiet irony. The public chases tech stocks, crypto coins, and AI startups, while the oldest monetary metal in history sits forgotten in drawers. Yet, under the surface, smart money has been accumulating it for a decade. Quick thought. What's your take? Is Kiyosaki overhyping it, or do you think he's seeing what most investors can't? Drop your take below, because I'm building a full follow-up on who's rigging silver prices and how. And if you want that deep dive when it drops, you already know what to do. Why does silver matter beyond money? Because silver is both currency and technology. It's embedded in our digital lives, our energy transition, even our defense systems. If prices skyrocket, it's not just investors who feel it, it's industries. Imagine EV prices spiking, solar panels slowing down, chip factories delaying production, all because of one minor metal. And during that chaos, guess who would quietly profit? Those holding physical silver and the institutions that prepared for scarcity. But there's a darker take. Some insiders argue JP Morgan's massive hoard isn't defensive, it's strategic. By owning so much, they can influence supply, suppress prices, and buy more while everyone assumes silver is boring. Keep it low until they decide it's not. This isn't speculation. Regulators fined JP Morgan traders for spoofing precious metal markets in 2020. No theory, that happened. So when Kiyosaki shouts, "Buy silver before they rig it higher," he might be warning you about the same system that already proved it could manipulate prices lower. Every financial system has pressure points. For silver, it's trust. The moment traders stop believing every ounce on paper exists, the moment delivery gets delayed, panic starts. Prices don't rise gradually, they detonate. So, is Kiyosaki's $200 silver bomb prediction bold? Yes. But impossible? No, because the fuse, inflation, scarcity, manipulation, is already lit. Sometimes, wealth isn't built by timing markets, but by understanding what power is building beneath them. Gold gets headlines, crypto gets hype, but silver gets ignored. That might be the most dangerous part. So what happens when that vault finally opens? When the public realizes one bank already owns the fuse and the bomb. In that moment, silver won't just be valuable, it will be political.